Hey traders, this is Ron. Happy Sunday here from Viva Las Vegas. Hope you guys are doing great. As always, everything in this presentation is for educational purposes only. So we'll do a video today looking out for the week, and then tomorrow there will probably not be a video because I'll be flying home. So let's start here with the SPY. Again, this was December a year ago. We're not too far away, and this is where we sit now. The S&P is sitting at fresh new all-time closing highs. We closed again higher on Friday. If we take a look at the Dow, the DIA, similar situation, all-time highs, the Qs, all-time highs. But if we go to the IWM and the MDY, let me zoom out actually. Here are the small caps, still flirting with that 160 area. We just can't get above it. They continue to lag behind. We can call that a bearish divergence, but if you wait around for them to catch up, you're missing on a lot of opportunity right now in the broad market. And then here are your mid caps. Remember, they did try to break out a little bit. Again, I'll zoom out. There you see the trading range we've been talking about, but there's been no staying power. Yes, we did close higher Friday, but there's still no major breakout, if you will. Now, I had a question on gold and silver. This is from Leo, and just my thoughts on what's going on with gold and silver. The volume came in back in June and July, and we had our break. And it was pretty much a nice straight line during many parts of that move higher. But gold right now, there's your peak in September, a lower peak. These basically are tie, that's still lower. And now we're getting a lower low. We're beginning to see lower highs, lower lows, which is the technical definition of what a downtrend would look like. With gold closing lower on Friday, it looks like by about 0.6%. We did undercut this level right here in October. I would probably say somewhere down around 132, which is about $50 on the gold contract or $5 on GLD, would be the ballpark support area. Maybe come down here to 130 and a half or something. But this basically block somewhere from there, 133 down to 130 and a half, is a support area. So a couple dollars lower. But keep in mind, from a seasonality perspective, the fall, the September, October timeframe usually marks the high. It doesn't mean gold's going to crash, but there's usually a high, and a lot of times there's a pullback. Gold's taking its time, but the high came in right in the seasonal window, and now we're seeing this, this fallback. We take a look at silver, zooming out, it exploded higher, shot up with the high in right at the beginning of September, lower highs. Now we have lower lows. Silver broke below the late September, early October's swing low. Now for silver, I'd probably come down and say, okay, maybe a gap fill to 15 something, 30, 40 cents lower. We're talking another 1, 2%, then down to 15, then down here towards 14. Definitely downside moves. Gold and silver return, especially gold with its bullish seasonality, the end of December into through January, early February. So right now, it peaked on target. They don't have to fall like a rock, but it's no shock that they are pushing lower. But that brings up the bigger question. The Chinese maybe might be buying, the Indians might be buying. The world's going to, heck in a handbasket, it seems. I do believe gold and silver go higher over time, just my personal opinion, potentially a lot higher, but they're not doing it yet. We're not seeing that massive volume surge. Instead, we're seeing them spike higher. They peak when their peak window occurs, when the rally's over, and now we're pulling back. We'll probably see, based on historical data, a rally December into January again, but then it might fizzle out again. So when we start seeing big volume coming again, we keep making higher highs, that would be a sign something might be happening. That did occur in here a little bit, but it didn't last very long. So right now, I think it's just gold and silver might go up and down based on news events, but is it the quote end of times, as a lot of these fear mongers like to say? I would say no. I don't see any evidence of that. The equity markets are holding up quite well, because where else is that money going to go? It's not going to stay in Europe with negative interest rates. Staying in the US in just a bank account doesn't make any money. So if funds are chasing a return in order to keep money and keep themselves in business, it has to be invested. And the US market's the most liquid market in the world. It's currently viewed as the safest, if you will, market in the world. Putting money in, getting money out. And do you really want to stick it in bonds? You're not earning anything there either. So I think the US stock market is still the place to be based on how we're seeing it react, and it just keeps pushing higher. Now, that said, does not mean this US stock market can't correct. It sure can. And we might get another vicious correction, have no idea. But the bulls are still around in the major indexes. And my guess is we're going to go way higher still. All right, now let's move on to Disney. The Mouse House positive earnings, or I shouldn't say positive earnings, it almost doesn't matter. Positive reaction to the earnings. Stock gapped up right in its seasonal window. Disney's one of the most seasonal stocks out there. Nothing's perfect, but if I zoom in here, look at how the volume increased day before earnings. Well, geez, jolly whiz. If you go back and look over the past couple years, it's exactly what you see as a majority, and then we get the gap up. Now with Disney here, I would consider a 20-day EMA in red as an end-of-day trailing stop. Last year, Disney didn't work out the best. Years past, it sure did. But if you were sitting there bearish on Disney because whatever newsletter reason, the big money typically comes into Disney this time of year and they ride it higher for the coming months. So Disney, right on schedule. How about a stock that had a bad day? Now, while I was here in Vegas, I didn't do a video the last 2 nights, but here is Expedia. Talk about taking it. Man, 135 down below 100. 35% drop. It did pop a little bit on Friday. Where is support on Expedia? Well, it's 100. Now, the thing with $100, big fat round number, human beings trade the markets, so it can be a magnet. 100 sort of held. The next stop will be all the way down here at 90. Expedia is another great example of why protected puts are warranted regardless of what the news might be out there. I mean, here Expedia went 145, 125. Here it went 125, 100. There has been past precedents to show that Expedia can drop. So if you have a protected put, kudos. If you don't, and you want to learn about it, there's no better time than the present. I would definitely learn more about protected puts. And if you need help with that, shoot me an email. I can send you some material. All right, here is Z for Zillow. This stock did gap up on Friday. What's interesting about Zillow is you sort of have a little bit of a cup and handle here, but with that gap up on volume, you cleared this previous high at 36, this little resistance. Technically, 44 could be a target where the gap down occurred, and then back up to that ledge in the upper 40s. That's a huge distance, 30% away or so. Here is SIEN, not to be confused with CIEN. Zooming out, this stock was in the 20s. It's now down below 10. But with that volume move and close near the highs, we took out this previous high here. Now we're sitting right here at 9. I would say once it closes above 9, then a gap fill here to maybe 11, then you just go to previous swing highs. Very high upside technical targets here. I would consider a 20-day EMA as a potential trailing stop. Question on Apple as well. Apple's just at all-time highs. There's not much to say. I just love how they poo-poo on Apple. They like to blame the tariffs. You have to remember half people hate the president, so anything that ever happens, they just hate. Haters gotta hate, right? And then you have negativity sells. So whatever they can write about Apple is negative, it sells. If you think back to when Buffett was picking up, or it was disclosed when he was picking up Apple, back when the stock was in the 90s, yeah, do you think he listens to those yo-yos? I would say not. With Apple up here, again, 20-day EMA is potential end-of-day trailing stop. If volume were to increase, we get bearish engulfing, that could be warning signs. Apple's going to move its manufacturing to countries that are going to be more favorable. They'll just keep moving it around, or they might even spread the risk out, which probably isn't a bad idea anyway. But this stock remains very, very bullish. I'm also very bullish on Apple personally. Here is StarBUX. Question on this one. Basically visiting Starbucks every day we're out here. Long lines, but that doesn't matter. Look what the stock's doing. Once we got below the 50-day, back here in September, we just can't get above moving averages. There was an attempt here a couple days ago, could not get above. Lower highs, lower lows. Until Starbucks closes back above major moving averages, bears have the edge. Before this chart could turn technically bullish, it's got to get above the 50-day. When that happens, bears would be concerned, put on notice, and the bulls start getting the edge. But right now, target, I would say on Starbucks, probably down there around $75. Still, what is that, $6 or so lower. Again, that is it. Wish you guys all the best. I'll be back with you most likely Tuesday night, as Monday I'll be traveling back home. Take care. And again, it was great to meet everybody out here in Vegas. We'll see you next time.